What's up, everyone? It's Scotty with MoneyVest. So after hours of frustration, disappointment, and anger, the Wi-Fi has finally been installed in my apartment. You cannot see the happy tears, but they were here just a few minutes ago. As I thank the Lords, the Wi-Fi is now finally installed after a lot of delays and a lot of postponement, and me having to use the hotspot for the last 2 days. It's been so expensive. But nonetheless, we are now back on track. There is going to be a ton of content, a lot of videos, lots of live streams. We are literally back. I'm all settled in now. There's a few more stuff that's coming in. So cooking wise, I still got to furnish the place a little bit better. But nonetheless, we are back on track with the Wi-Fi. That's the most important thing. And of course, some basic level furnishing as well. So thank you so much for joining. In this video, I'm going to break down the month of September, although we have talked about it very briefly, but there are some other statistics and data points that I want to go over in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. The first week of the month is the best time to join, and we'd love to have you on board as a MoneyVest member. And of course, you get access to all the members-only private videos, buy and sell alerts, options alerts, trade ideas. Everything is going to be included, as well as the fundamental and technical analysis courses, and the options course also is going to be available 50 to 60% off. We do have the Labor Day sale right now going on until Monday night. So after that, it does expire. Coupon code is going to be LABOR4 if you want to take advantage of that. And again, you get access to over 100 plus video lectures, over 25 to 30 hours of content, all the spreadsheets, PDFs, cheat sheets, whatever you want to get access to. Fundamental, technical wise, and options trading is available on these courses. So again, link's going to be down below. We'd love to have you on board. So when it comes to September, we are certainly going to be in for a little bit of a rough ride. Let me just pull that up very quickly. Just give me 1 second. So this right here was the report that came out earlier today that basically suggested a stormy September for U.S. stocks could be ahead, and something that we are already aware of. So something that we talked about in one of our previous videos, but a stormy September for U.S. stocks may lie ahead. What investors need to know about the Wall Street's worst month. Now, regardless of how you spin it, regardless of which data set you look at, regardless of which year you go back to, September is brutal, period. August is not the case. June, not the case. February, not the case. In some years, we're higher, some years we're lower. Again, if you go back to, for example, February, you'll notice that since 2003, we've actually been positive. If you go back to May, only since 1928, we've been negative, but everything else, we are positive. This right here, August, once again, very much back and forth. Since 1928, on average, the monthly performance has been negative, but more recently, since 2003, since 2013, it's been more positive. But for September, nope, not the case. It's always been negative. Since 1929, since 1950s, since 1990s, since 2000s, and since 2010s. We are always negative for this month. So stock market volatility seen throughout August is not over, and we expect continued volatility in September as the market starts to price in a slowdown in economic activity caused by the lag effect of the Fed's past rate hikes, is what Richard Saperstein said, Chief Investment Officer at Treasury Partners. And the stock market pullback in August was warranted as multiples expanded rapidly, and yields on the 10-year yields definitely did surge. And of course, surge suggesting inflation and rates will remain higher for longer as well. There is obviously some macro economic data that's coming out. Of course, we got the Fed meeting, we got the inflation numbers coming out. We already did get the unemployment numbers, and a fierce AI-led rally in the U.S. stock market ran out of steam in August, with S&P 500 on pace to suffer the worst month since 6 months. And of course, the NASDAQ also the biggest monthly decline this year in 2023, things that we have already talked about. And since 1945, the large cap S&P 500 has delivered an average monthly return of a negative 0.73% with a win rate of just 44%, right? So that's definitely not that great. Of course, we've got over a 56% probability that we're going to see a negative month for September. And as a result, September's track record for benchmark beatings, we remind investors to prepare for possibility of disappointing results for both the S&P 500 and NASDAQ in the month ahead as well. So this is going back as far as 1945. And the deepest percentage decline was 11.3%, which 11.3%. And of course, we have September sitting at 11.9 right over here. And the standard deviation is about 15.1. We got the highest percentage gain, 8.8%. And frequency of advancing is only 44%. So the worst odds for the market. And the best odds obviously is December. December is the best month for the market on average. 77% probability that it's going to actually end up being green in the month of December. That's exactly why this time of the year is so important for investors, because probability wise and looking at statistical seasonality, this is the best time to be loading up and having dry powder already. That's why I'm doing this video on September 2nd, so that we can better understand that, okay, there needs to be dry powder, there needs to be cash available. If there's going to be deals, take advantage of them. And then, of course, Q4 is going to be very strong. October, November, December has got a very high probability of success. And we know that Q4 in general is usually a time when the markets do end up rallying pretty aggressively. We've talked about that seasonality in the past as well. NASDAQ, same thing. Instead, for the NASDAQ, the best month is indeed in November, not in December, but November, 71% probability that we see advancement in that month, and 52% probability that September is higher. So again, that's 52% is actually the lowest for the market. That just tells you a little bit about how bullish the markets usually are most of the time, and how very rarely the markets are selling off. So 52%, which is the lowest for NASDAQ in the month of September. And this is going back as far as 1970s. We're not going back as far as 1940s for this particular chart. So the bottom line is that, in September, there's consensus. There's not only consensus, there's a lot of seasonality, a lot of statistics backing this thesis that this month could be red. But that being said, it shouldn't stop us from looking for deals, finding opportunities, looking for undervalued stocks and dollar cost averaging, and deploying some of that cash either by selling puts or dollar cost averaging straight up, buying shares, and frequently kind of dollar cost averaging, consistently being able to invest in the markets. And even if the markets don't really sell down, don't really come down, which I do think it's going to happen, because if everyone's thinking the same thing, what does the market do? The exact opposite, right? So if everyone's thinking, oh, September is usually the worst month for the markets, seasonality wise, it's supposed to be red. Well, guess what? What if September this year is not going to be the case? Market ends up rallying, quite a bit, and of course, it can happen, because that's where the consensus is. Now, the important thing also to remember is the last 3 years, the markets have been red in the month of September. So 2019, 2020, and 2021. Actually, not 2019, but 2020, 2021, and 2022. So those 3 years, the markets have been red in September. So it is possible, at least in my opinion. And again, I'm not one for making predictions. I never like to make predictions, because investing and trading is very much reactionary. So you're basically trading based on the data that's coming in, and you're reacting to the environment around you instead of predicting what the future might look like, right? So the latter, don't do that. In my opinion, it's not the best way to invest, because your predictions, my predictions, are never going to consistently be right. Instead, look for the data, look for the environment that you're in, look for the incoming economic reports, and of course, base your decisions off of that, and then trade in a more reactionary manner. So I'm not one for making predictions, but that being said, I still do believe and expect the markets to actually break that 3-year streak and maybe be higher in the month of September. So that's where we are. Dry powder is ready. I'm going to start deploying some cash very soon. Hope you guys enjoyed this video, find it helpful. Make sure that you drop a like, subscribe to the channel if you want access to all the alerts that I will be posting in the month of September if there are going to be potential deals. Link's going to be down below. We'd love to have you on board. First week of the month is the best time to join. And don't forget, fundamental technical analysis courses as well as the options course available for sale up until Monday night. And the coupon code is going to be LABOR4. As always, happy investing, and I'll see you all in the next video.